Much like when an athlete prepares his mind for a performance, a trader needs to be intentional about the mind he brings to trading. Without preparing the mind for the work of trading, the trader is at a huge disadvantage. Even faint levels of fear, excitement, or euphoria can easily sabotage the mind that can effectively manage uncertainty, probability, and the unknown. In this section, I will share how Kamran has combined the work of two famous trading psychologists, Randy Howell and Mark Douglas, to build a trading mind in order to achieve consistent profits. Randy Howell's work goes deeply into biology and risk from a more traditional standpoint, and Mark Douglas's work does a great job of explaining the fundamental execution skills that you need in order to be a consistently successful trader. According to Randy Howell, no matter how hard you try, no matter how long you search for the secret that will open the door to the next level, negative emotions still sabotage your trading mind at just the wrong moment. Keeping a clear head is easy when there is no skin in the game. But the moment that real capital is put at risk with an uncertain outcome, everything changes. Suddenly, primitive survival instincts kick in and ambush the rational mind. We have inherited these primitive survival instincts from our ancestors when they were cavemen thousands of years ago. Their brain had to stay on the lookout at all times because they were surrounded by many dangerous forces, so it developed a way to stay super sensitive and pick up on danger. That's all great for cave times, but that same alert system is still in place today in our brains and keeps us looking out for danger, even when the stakes are quite a bit lower. We bring the same caveman brain and instincts into trading every time our real capital is put at risk with an uncertain outcome. This mindset is where the trouble begins. Fear of uncertainty and the urge to chase opportunity then compromise the required disciplined mind. Traders need to stop using the beliefs which are deeply rooted in the survival instincts of our species and instead create new beliefs to maintain a disciplined mind so they can use their knowledge in the heat of the moment. The more the trader tries to control his or her emotions, the more seem to pop up at all the wrong times. But the reverse is also true. By understanding emotions, traders learn how to use emotions to create the mind that performs effectively under the conditions of uncertainty and capital risk. Effectively managing emotions are front and center to your success in trading. The mind you trade with is rooted in your emotions that arise when you are engaging the challenges of managing uncertainty. Mastering emotions as a response to engaging uncertainty is simply essential. Until this is understood, there will always be a mental block to your capacity to trade effectively. No amount of knowledge, hard work, or success thinking is going to overcome the obstacle of emotional ignorance. The brain interprets uncertainty as a potential threat to survival, particularly with capital at risk. This is the brain you brought to trading, but it is not going to be the one that brings you success in trading. Emotions are only doing their job that they were designed to do. The moment that loss of control over outcome with capital at risk is real, your survival instincts kick in, almost disabling your thinking capability. Your brain becomes so locked up into a very narrow definition of success that it cannot see the need to adapt to a new way of perceiving the world in which it lives. This narrowing of focus of attention becomes the mental block to your growth as a trader. You're locked in and don't even know that you are locked in to a self-limiting tunnel vision. You see only through the eyes of your survival instincts and emotional brain when exposed to the challenges of uncertainty and risk. Until this genetically encoded sequence is changed, your trader's knowledge and skill is lost at the very time that it is needed most. Changing your emotions that give rise in your mind in the midst of uncertainty when you trade and your capital is at risk is the name of the game. Until you unlock this perceptual barrier, you are stuck with the default programming of your survival instinct. The more you resist and try to force your will, the stronger the emotional reaction will be. Remember, to your emotional brain, it is a life or death situation. In such emotional urgency, the thinking mind becomes slave to the emotional brain because it is hijacked by the overriding power of survival instincts. This is simply the default programming of your survival instincts, triggering fear and anger. Until this reactive pattern is observed, deconstructed, and redesigned for the management of probability, you will stay stuck in a mental and emotional survival stalemate that sinks your capacity to manage uncertainty with an effective mind for long-term profitability. Our mind becomes vulnerable when dealing with uncertainty. Now, for success in trading, a new belief with a different emotional configuration is needed when exposed to the challenges of uncertainty. The hot wiring between uncertainty, vulnerability, and confusion has to be decoupled and replaced with a new emotional response to the perceived dangers of uncertainty and capital risk that will result in a patient and disciplined mind. This requires a completely different way of perceiving the world in which you engage. Fortunately, your brain is primed for this adaptation. Once you truly realize that the mind that you brought to trading is not going to work to produce success in trading, how do you go about changing your perception, your personal narrative, for managing market uncertainty for long-term profitability? To answer this question, Mark Douglas suggests you need to create new beliefs in your subconscious mind that automatically determine your perceptions, expectations, behavior, and emotional state in regard to engaging the markets for long-term profitability. You also have to turn off beliefs that can potentially sabotage your investing endeavors. If we're mindful and intentional about the thoughts and realities we want to cultivate, we can vastly change our brains. It's all about creating new beliefs, and these new beliefs are the light at the end of the tunnel. How do you create new belief systems? By intentionally becoming aware of new things we didn't notice before and looking at what we already know in a new way. In order to create a new belief, 1. The new belief must be believable, and 2. The new belief must correspond to what you want in life. For this new belief to be believable, first we must find evidence that the new belief works effectively. That is, it produces consistent profits in uncertainty. So then the question is, how can someone produce consistent profits from an event that has an uncertain outcome? To answer this question and find evidence for the new belief, all we have to do is look to the gambling industry. Corporations spend vast amounts of money, in the hundreds of millions, if not billions of dollars, on extravagant hotels to attract people to their casinos. Casinos make consistent profits day after day and year after year, facilitating an event that has a purely random outcome. The new belief to be created is, you need to trade like a casino. In his book, Trading in the Zone, Mark Douglas shares 5 fundamental truths about this new belief, you need to trade like a casino. Before we get into these 5 fundamental truths, let me share with you what is meant by trade like a casino. Casino owners and consistently successful traders understand that events with probable outcomes can produce consistent results if you can get the odds in your favor and there is a large enough sample size. Consistently successful traders treat trading like a numbers game, similar to the way in which casinos approach gambling. To illustrate, let's look at the game of blackjack. In blackjack, the casinos have approximately a 4.5% edge over the player, based on the rules they require players to follow. This means that over a large enough sample size, that is, number of hands played, the casino will generate net profits of 4.5 cents on every dollar gambled on the game. This average of 4.5 cents takes into account all the players who walked away big winners, including all winning streaks, all the players who walked away big losers, and everybody in between. At the end of the day, week, month, or year, the casino always ends up with approximately 4.5% of the total amount gambled. That 4.5% may not sound like a lot, but let's put it in perspective. Suppose a total of $100 million is gambled collectively at all of a casino's blackjack tables over the course of a year. The casino will net $4.5 million. What casino owners understand about the nature of probabilities is that each individual hand played is statistically independent of every other hand. This means that each individual hand is a unique event, where the outcome is random relative to the last hand played or the next hand played. If you focus on each hand individually, there will be a random, unpredictable distribution between winning and losing hands. But, on a collective basis, just the opposite is true. If a large enough number of hands is played, patterns will emerge that produce a consistent, predictable, and statistically reliable outcome. Even though you don't or couldn't know in advance the sequence of wins to losses, you can be relatively certain that if enough hands are played, whoever has the edge will end up with more wins than losses. The degree of certainty is a function of how good the edge is. It's the ability to believe in the unpredictability of the game at the micro level, and simultaneously believe in the predictability of the game at the macro level that makes the casino effective and successful at what they do. Their belief in the uniqueness of each hand prevents them from engaging in the pointless endeavor of trying to predict the outcome of each individual hand. They have learned and completely accepted the fact that they don't know what's going to happen next. More important, they don't need to know in order to make money consistently. Because they don't have to know what's going to happen next, they don't place any special significance, emotional or otherwise, on each individual hand, spin of the wheel, or roll of the dice. In other words, they're not burdened by unrealistic expectations about what is going to happen, nor are their egos involved in a way that makes them have to be right. As a result, it's easier to stay focused on keeping the odds in their favor and executing flawlessly, which in turn makes them less susceptible to making costly mistakes. They stay relaxed because they are committed and willing to let the probabilities, that is, their edges, play themselves out, all the while knowing that if their edges are good enough and the sample sizes are big enough, they will come out net winners. Consistently successful traders use the same thinking strategy as the casino. Not only does it work to their benefit, but the underlying dynamics supporting the need for such a strategy are exactly the same in trading as they are in gambling. Let me now share with you Mark Douglas's 5 fundamental truths about this new belief that we are attempting to create in our mind. 1. Anything can happen. It means you have no control over the market. 2. You don't need to know what's going to happen next in order to make money. You don't need to be a psychic or try to predict the market. This is not to say that you cannot predict what the market will do next and be correct, only that you don't have to, and that by trying to predict, you attach yourself to the need to be right and the associated ball and chain. 3. Wins and losses are random. You will never know when a trade will be a winner in advance. 4. Your edge is nothing more than a higher probability of one thing happening over another. Your edge is no guarantee of a winning trade, just of winning over time. 5. Every moment in the market is unique. Just because a similar trade won last time does not mean it will this time. And by treating each trade as totally unique, you can see the truth of the trade without relating it to what happened last time. Mark Douglas, through his work, attempts to convince people like us that trading is just a simple game of probabilities, not much different from pulling the handle of a slot machine. At the micro level, the outcomes to individual edges are independent occurrences and random in relationship to one another. At the macro level, The outcomes over a series of trades will produce consistent results. From a probabilities perspective, this means that instead of being the person playing the slot machine, as a trader, you can be the casino if 1. You have an edge that genuinely puts the odds of success in your favor. 2. You can think about trading in the appropriate manner, that is, Mark Douglas's 5 fundamental truths, which we just covered. 3. You can do everything you need to do over a series of trades. Then, like the casinos, you will own the game and be a consistent winner. Once this new belief to trade like a casino is integrated into your trading mindset, then there will be no fear, resistance, or distracting thoughts. On the other hand, this new belief is going to create a head-on collision between your desire to think objectively in probabilities and all the forces inside you that are in conflict with this desire. The amount of difficulty you have in integrating this new belief in your trading mindset will be in direct proportion to the degree to which these conflicts exist. Don't be surprised if, initially, you find integrating this new belief in your trading mindset virtually impossible. How should you handle it? Monitor yourself and use the technique of self-discipline to refocus on your objective. Write down Mark Douglas's 5 fundamental truths and keep them in front of you at all times when you are trading. Repeat them to yourself frequently with conviction to replace the emotions of fear in your mind. Repetition of the fearful activity is well illustrated by the analogy of a horror movie. Think back to the first time you saw a good horror movie. Because you had never seen the film, the first time you saw a horror scene in it, you were probably terrified. However, after the 20th viewing, the same stimulus produces a different response in most people, like laughter. Repetition of the stimulus has desensitized you to that which was originally terrifying, because we now know exactly what will happen next. Repetition, research, and under-leveraged trading deactivate one of our greatest fears, fear of the unknown. Although we cannot know the outcome of a particular trade in the markets with the same certainty as that of a horror film, repetition of the execution of uncomfortable, positive expectancy trade setups can nevertheless deactivate our fear of the unknown outcome, gradually replacing it with confidence in our edge. Don't try to deny the existence of conflicting forces in your mind. They are simply parts of your psyche that are arguing for their versions of the truth. When this happens, refocus on exactly what you are trying to accomplish. Follow the rules of your trading plan as best you can. Doing exactly what your rules call for while focused on your new belief will eventually resolve all your conflicts about the true nature of trading. Every time you actually do something that confirms your new belief, you will be drawing energy out of the conflicting beliefs and adding energy to a belief in probabilities and in your ability to produce consistent results. Eventually, your new belief will become so powerful that it will take no conscious effort on your part to think and act in a way that is consistent with your objectives. It is vital for us to have a full-blown faith in the ability of our edge to provide us profits over time. In order to build this level of faith, it is imperative that we personally conduct research using historical trading data to build our trading edge. It is not enough to hear from others that a system works. It is not enough to read the summary results from research conducted by others. We must do it ourselves. It is the strength of this faith in our edge that activates a new set of emotions when managing market uncertainty. The strength of the faith in the edge replaces the default negative emotions of fear with positive emotions of confidence and courage. With these new emotions, our mind remains carefree and our thinking brain stays functional. The thinking brain helps in keeping discipline when following our trading plan. The new set of emotions create a mindset that performs effectively under the conditions of uncertainty and capital risk. Randy Howell and Mark Douglas theories reveal consistently winning traders understand, and even more important, internalize that the outcome of a trade is not in their hands. Once they have done their duty, created a trading plan, researched their trading idea, and waited patiently for all signals to align, they know that there is nothing else that they can do, and that, upon entering a trade, they have to accept the randomness of the results. Consistently winning traders know that over the long term, they will come out ahead if they follow their principles and rules, and that in the short term, anything can happen. Therefore, they don't see losses as something bad or something to worry about. As long as they haven't done anything wrong, consistently winning traders do not see a difference between losing and winning trades. Consistently winning traders are process-oriented thinkers. It means they have the ability to trade and act completely detached from the outcome. Consistently winning traders only evaluate their action and behavior based on how well they have executed their trades against their trading plans. This approach removes the emotional ups and downs that come from adding meaning to individual trades, because the results of individual trades don't mean much in and of themselves. It's a great feeling to be able to let go and let the system do its job without freaking and making it personal.